Welcome to the Financial Legacy Podcast. I'm your host, Maria Ellis. On every episode, I will bring you my perspective and the perspective of my guest on financial and estate planning. Here at the Financial Legacy Podcast, we're changing lives one person at a time by creating your own financial legacy. To help you create and enjoy your financial success, connect with us at financiallegacy.live for your complimentary consultation. Today, I would like to welcome our guests, Bradley Christie, an advisor and real estate expert here in New York City. And we're going to be talking about cryptocurrency and how that has affected the real estate market here in New York. Bradley, welcome to the show.
Hi, thank you, Maria. Thanks for having me.
Great. Tell us a little bit about your background and, your professional practice. How long have you been providing advisory services and real estate services to your clients?
So I got into the real estate industry myself when I was in my younger 20s. I purchased a property in Queens, New York. During that process, I learned a lot about being a consumer. At that time, I was working in a completely different industry for CBS News. And long story short, I was almost there 10 years. I left there in around 2013, and I went into real estate full time. So, roughly almost another 10 years I've been in this career. I'm an associate broker, so I've done a good amount of deals here in New York. I'm also licensed in New Jersey and Pennsylvania. And a portion of my business is also working with professional athletes and helping them nationwide, more on a hand-holding basis. I mean, it's a different animal, but anyway, in New York City, 10 years roughly, and I've done residential and I've done commercial.
Perfect. So I know that the cryptocurrency and the crypto market, from a macro perspective, could you share a little bit about what's happening today in terms of cryptocurrency prices and market cap?
Yeah, Bitcoin right now is sitting around 640 billion in a market cap. That's obviously the big boy in the crew. Ethereum is roughly around 230 billion in terms of market cap. The entire crypto global market cap is around 1.7 trillion. And if you were to compare it to something relative, gold is around 11 trillion, a little bit more than that. So a lot of buzz going on about crypto, but still very small market cap compared to other assets.
That is true. However, the cryptocurrency is a relatively new phenomenon, right? I mean, it has
Sure.
been, gold has been in existence for a long
Yes,
time.
that's true.
So it sounds like the cryptocurrency is really taking off, and I know
Definitely.
it's different in different countries and regulations or lack of regulations. There is some speculation because of that, so there is some volatility in the marketplace for sure. So how do last year was an unusual year, right through COVID. How did the prices affect? How were the cryptocurrency prices affected during COVID, for instance?
Well, to be honest with you, crypto and Bitcoin runs on a 4-year cycle. The way that Satoshi designed it, every 4 years you have what they call a halving, which there's only going to be 21 million Bitcoin out by 2140. So when he designed this, he designed it to have an artificial boom and bust cycle. So it was created in 2008. The first halving happened in 2012. Then you ran into what you call a bull market in 2013. So you do 4 years from that, it's 2017. And then now we're in the third bull market of 2021. Really, the crypto prices were affected in the March lows when we had the major drop in the V recovery in the equity markets. That was the same thing that happened with crypto. But as far as I'm concerned, regardless of that, what we're seeing now was something that you could technically play out. So it was affected in the sense that it dropped more. It kind of broke a cycle pattern. It went down to around 3,500, but it quickly recovered. And since then, it has broken the all-time high that it hit in 2017, I think, in November. And then it obviously had its peak around 65,000 so far this year. So pricing was affected. People who like to speculate about Robinhood traders and people working at home and so forth, and sports not being around and kind of that whole narrative of GameStop and AMC and yada, yada. But I think in all honesty, that's kind of noise. The reality is that to move the market the way that this is moving, there's something else behind it. And that's why Tesla, that's why MicroStrategy, that's why Cathie Wood bought 1 million shares of GBTC, which is a Grayscale trust for Bitcoin yesterday. That's why, this is not something new to people who know what it is.
Right. There is, and like any other financial instrument, it's a matter of supply and demand and what happens in the economy. So there is price fluctuation. So, which is an important point later on as we discussed. What are the components of doing a real estate transaction while using cryptocurrency. So we'll talk a little bit more about that. Let's just look at it from the global perspective, because both you and I have a lot of international clients, lots of buyers, lots of sellers coming to the United States to diversify their investment portfolio, so they end up buying real estate. And so from a global perspective, how is the cryptocurrency going to be impacting the world, or is impacting the world in your view?
Well, it's massive, especially if you want to talk about real estate. For a bank of, like, let's say Bank of America, and forgive me if just to give it for the audience a general understanding, I'm sure I know you know this, but to go from one ledger within the same bank, it's fine. But if you want to go from one ledger, Bank of America, to Chase, let's say, it has to run through a central bank. So the bottom line is that when you are dealing with a bank internationally, it even gets even more convoluted. So with Bitcoin, therein lies the rub, because there's the value. It's you no longer need a central bank, But how do you think the Bank of China, the IMF, the European Bank, and the Federal Reserve is going to feel about this? I mean, obviously that's a side note, but the bottom line is that internationally, if somebody, let's say, not even taking El Salvador, who just made it legal, tender, into consideration within their own. But if you're a person who's out of the country who wants to buy real estate in the country, you can now move millions upon millions of dollars within hours, and you don't have a third party that you have to push it through. And as far as people who are in those positions, you save money and you also save time. So it's massive in terms of what that could be, especially for a city like Manhattan.
Yeah, no, absolutely. This is why we're seeing, an increased interest in purchasing real estate with cryptocurrencies. There is, to play in a little bit of devil's advocate here, there is a little bit of concern in terms of not having proper regulations, especially as we, go international, because as you were saying, we have to trace the money from the various collaborators at this point. So a particular currency will be a certain price, let's say in the US versus in Africa or the Netherlands, right? Because of the process that it has to go through.
Yeah, that's true. It trades, they have a kimchi premium in Korea, for example. That's why really the reality is that the infrastructure for a real estate transaction to be done between a person who wants to do a Bitcoin to a Bitcoin exchange really isn't there yet. You have city and state transfer taxes that need to be based on fiat, that it gets convoluted. There was already a case in SoCal where they sued the buyer for the amount of the sales price that was done in crypto converted to fiat, and basically the city and the state settled for half. I don't know how everybody's going to play that out. Obviously, that's not going to work on a mass scale. So you run into infrastructure issues. I was speaking with a company, a title and escrow company down in Miami yesterday. So to your point about tracing the Bitcoin, they were actually talking about a 24-hour delay before the funds will actually be exchanged to the seller, because they need that 24-hour period in order to basically track down to verify that those funds aren't coming from illicit activity. So that, the value add is really just in the sense of another opportunity for somebody who is already in the space to capture it. Or on the other end, it's an opportunity for somebody who has it to purchase property with it. It's not that that it's faster, it's seamless, it's a better mechanism right now. It really, that has to be developed, but it is being developed.
Yeah, it's another way of creating payment. For some of our listeners who may not know exactly what we mean about fiat, we are basically looking at cash, right? So
that's right.
So that's when we say, fiat, just think about cash and how you convert the Bitcoin into cash. So cryptocurrency, which are the influential trends in the currency market? Which of those trends do you think are very influential?
From a political point of view, I know in New York, well, Miami, for example, is a city that is embracing it. So there's a trend going on in the United States that mayors and local municipality leaders are trying to get the traction going because they see the writing on the wall. Outside, maybe more important than the actual cryptocurrency is the technology of blockchain underlying the cryptocurrency.
Right.
And that's probably the thing that is going to be more significant, even though we may not necessarily notice it on a day-to-day transactions. That is actually the thing I think that most corporations and governments are interested in. The cryptocurrency is just an insulation. It's insulated by that, and it's a benefactor of the underlying technology. So the trends that I'm seeing on a political level, like New York City, for example, the financial capital of the world, they have the mayor race going, and I don't know where we stand right now for the, who's going to be running for the office, but I think Adams was the person who I saw most recent that was in the lead, and he is saying that New York City is going to be, a cryptocurrency haven. Not haven in the sense that you could come here and not pay taxes, but haven in the sense that they're going to create an ecosystem around it. So I think that's where it's going. DeFi, decentralized finance, is really the industry that seems also to be taking off, and it's kind of in uncharted territory. So DeFi is a trend without a doubt, and that's being done so really, like I said, primarily on the blockchain. And then you also have the political environment that's getting more friendly to that. And then I would also then say on an international level, El Salvador made it legal tender about 2 or 3 weeks ago in early June. And maybe to people in the United States, it's not relevant because we're not in the position that the people in El Salvador are. But nationwide, there's around 2 billion people who don't have bank accounts. And even there was a part of Kenya had a situation happening where they were using mobile minutes as a form of payment. So when you look at countries that deal with, the lira at 20% interest, or Argentina, Venezuela, Bitcoin presents an opportunity because of all of the reasons that we've said, but also it presents an opportunity for the future of those people who were there. So you have international trends, you have local in the United States trends in the major cities, and then obviously companies are adopting it. So I think all around it's kind of coming to fruition. It's just this hangover of illicit activity and Silk Road and people using it to commit crimes and launder money and so forth, that they have a stigma attached to it. But as more time rolls through, the dust settles on that.
Yeah, so and as regulation takes place, so that to be able to monitor and to be able to trace the money, to make sure that the money is legit, is going to be able to be very useful,
Yep.
because there is a high demand. I mean, there is about 100 million people around the world that are using it in different forms in terms of exchange.
Yep.
So there is certainly a demand for it. I think that as large corporations embrace it, the ability to be able to deal with cryptocurrency and in a way sort of legitimize it, I think that there's going to be more of an acceptance to it. On the other hand, what do you think the financial institutions' position is going to be? What's your thought on that? Because clearly they are not interested in losing market share.
Yeah, I think it's kind of hit and miss. I think it's, one of those things truly where you see a blend of the times. I mean, people who I've spoke with that are more traditional, that don't really want to get too involved into it, that believe more in the Warren Buffett and the Charlie Munger logos, they kind of look at it like how I just laid it out, illicit activity, Silk Road. And these are people at the companies like Goldman Sachs that I have conversations with, but the reality is, honestly, when we start talking about details, they don't know the details. They just know what they know. And they know what's worked for them. And it's kind of like, why am I going to get involved? I think the people who are really getting involved are tech companies. Cathie Wood, like I mentioned earlier, she bought a bunch of coin from Coinbase stock, and she bought GBTC, which is Grayscale's Bitcoin trust. They're the first trust that came in, offering to institutions a mechanism in order for them to purchase in. But I think the people who tend to purchase that and the institutions that gravitate towards that, Tesla, MicroStrategy, both, Tesla formerly in the NASDAQ, MicroStrategy, another tech company, PayPal tech company, Square Tech, Twitter Tech, it's tech driven. It's really the tech companies that see it. So to your point, as far as institutions, it's if you can make money. And I think that that's what's going on right now. The volatility is something that has never gone away. So, and I don't like, it's not going to be going away anytime soon for us. But as far as volatility is concerned, I think Wall Street likes that. I think that's where they really make their money. So I think a lot of the stuff that I see that's out there personally, I just feel is stuff that you got to take with a grain of salt whenever you're watching CNBC or any of those channels, because they do, I think, the opposite of what they say a lot of the time.
Right, and cryptocurrencies and that are doing well in the marketplace, like you mentioned. There's doing well is the market is really very volatile. So it depends. It depends on which side of the coin you are, so to speak. But some interesting stocks that I've been playing with have been like Grayscale Lightcom, LTCN, and Grayscale Ethereum, ETHE, or Grayscale Bitcoin. And by the way, we're not making a recommendation to the audience that are listening to us. We are just trying to provide you information so that when you are trying to learn more about, what cryptocurrencies means and what the opportunities or challenges are, this whole process is to basically educate people as to the various choices and opportunities that are available in the marketplace. But yeah, it's a very dynamic market, high volatility, so you need to do your research. Yep. So this is a long shot, but do you think that cryptocurrency will ever take over traditional currency, or do you think it's going to be a blend?
Blend, yeah. I don't think it's ever like to me, using in the United States at least, the digital dollar. I think that Powell has said that is going to be coming out in 2023, 2024. I think the digital dollar is something that people are going to use to buy, a Snickers at the corner store. To me, I don't look at something like Bitcoin. Forget Dogecoin. That's not even in the conversation for me. That's truly just a trend that'll fizzle out. But as far as it goes with using something like Bitcoin, for example. I mean, it's story after story. The guy that first bought $40 worth of pizza in 2008 with Bitcoin, he used 10,000 Bitcoin, which would now be worth something like, my numbers are probably in millions. We'll just put it that way. And then you go through the stories of people who've had it in millions and millions. And that's the thing. Like, I think the volatility on the short-term basis, and this is why I like it so much with real estate, the volatility on the short-term basis will definitely get somebody's emotions going because they see 100% drop or 50% drop, whatever. But when you look at it over the long term, it actually is kind of a metaphor for me like real estate, because in 2007 or 2009 when the market crashed, it took about 7 years until 2016 hit, but it came. And even if you look at now with what's happening outside of New York City, it's here, and it happened a heck of a lot sooner than it does. I should say it happened. Bitcoin's recoveries happen a heck of a lot faster than that. And they're ferocious. I mean, if you look at the all-time highs going back, 65,000 so far this year compared to 20,000, 4 years ago, which is compared to, 1,100 4 years before that. The chart is truly going up because it's hitting on the supply and demand. So the volatility on an annual basis is certainly like this, but when you spread it out over the course of 4 years, it's a staircase up. So that's just the first point that I would make. But as far as it goes with using an instrument like that to go and buy something, like even a car that Tesla accepts it, that makes no sense to me, because why would you use a deflationary currency to buy one that is a victim of inflation? Immediately when you drive it off the lot, you lose its value, and then at the same time, that money used to pay it for it is going to get eaten up. So real estate becomes, in my mind, deflationary when you leveraged the bank's money. So that 20%, yeah, sure, that 20% that you have essentially is going to, get eaten up. But that 80% that the bank is loaning you, you could essentially take that 80% of your own, go into like an S&P index or something, and then let the bank's money get eaten up. And the way that it plays out, as long as you make more money when you sell the house, people don't even think about inflation because they're not comparing a check mark when they sell to when they bought. They don't have a frame of reference. So they just know they're getting more money. They don't realize that the money that they're getting buys them less than what it did when they bought it. But the point is that if you don't put up your liquidity on the front end and you leverage the banks, then it's not really like your money is now buying less. It's just a small portion of it, a fourth of it or a fifth of it, depending on how much you put down. So to me, to use something like Bitcoin to buy something at the stores, that's not the way to go about it. That's why DeFi is very interesting, because you have the strategies that are outlined where you can take a loan against it, and they don't want anything that a bank wants. I mean, you can literally, if you have the assets, they'll just give you the money. Now you do have, because of the volatility, if it hits below a certain point, they may start selling off a piece of the collateral sooner than later. But again, it's really about holding it, and it's at the same time about not trading it if you're not familiar with how to do that. So but on the other hand, you look at El Salvador, to me, that's the writing on the wall. You look at Africa, writing on the wall. Turkey, writing on the wall. It definitely could become a currency.
So let's give our audience a real example of, let's say that we have a buyer and a seller here in New York City. They have identified a particular property. They have agreed, the buyer and the seller have agreed as to the price that the buyer is willing to pay and that the seller is willing to accept. We have an accepted offer. Mm-hmm. Now we come to the negotiation of, okay, we're not going to be paying with cash. We are going to be paying with Bitcoin. So the best way to do that is to, at that point in time, agreed upon what the value of the currency is going to be like, right? Because it changes so much. What are your comments on that?
Some people will put an extra amount in. So to handle that volatility, some people may throw in an additional 10 to 15%. You know, the other side of the coin is before you even get there, if there's a mortgage on the property, the deal's not going to happen because the bank's not going to accept Bitcoin.
Exactly. Exactly. Yeah. It has to be 100% cash.
Yep.
So if you're buying a 1-bedroom in New York City, let's say for $750,000, which will be a great deal in New York, in a nice German building with nice amenities, you know, you have to pay cash for it, right? You cannot at this point obtain a mortgage. At some point, maybe the banks might want to consider that, but there's nothing formal as of yet. So yeah.
And if the seller has a mortgage on the property, too, so if the seller owes on the home as well, they can't take the currency in Bitcoin because in order for them to pay off the lien, they need fiat.
Right, they need to have that cash.
Yeah, so they have that on a free and clear. Yeah.
But it could be a combination. Let's say, to give you an example, that same 750, there is a $400,000 mortgage. The buyer may want to do a combination of cash of 400 plus any closing charges and things like that there might be, and then the remainder could be done on a Bitcoin situation.
Yeah, I think I definitely think that it's viable, and I think that it's something that people would accept. Again, you just run into the issue of what does the city and the state refer to as the purchase price, because there's really two things that get mishmashed together when people talk about this. One is the cryptocurrency sale, and then the other thing is people talking about smart contracts and how a smart contract executes itself, and if one of the metrics isn't hit, it dissolves, and smart contracts are supposed to be more efficient, and so on and so forth. Well, Bitcoin as it is right now doesn't run smart contracts on its blockchain. So Ethereum does, and I know somebody who did a sale through Ethereum, and they created their own smart contract because they're in the industry. And it runs roughly, like for the average person, around $1,000 would probably be what you would pay. There's no company out there that's advertising doing a smart contract for $1,000. I'm giving that number in reference to like what it would probably cost on the market. But the point of the matter is now you're not even getting Bitcoin. So now taking kind of a step back, I don't think any title or escrow company is going to touch Ethereum. I think they're only going to, if anything, really just work with Bitcoin. And, that's the issue that you run into is really most escrow companies, I still even think today, will think that it's too risky. Quite frankly, they don't know how to do it. It's just what it comes, that's it.
Yeah, they don't have the system and their infrastructure set up in a way that it allows that sort of thing. So that might be something that might come in the future. We will see. Enough to say that cryptocurrency is an interesting area, a new field of opportunities and risks as well. So as the audience, please make sure that you take this as information again as a form of information and not necessarily an financial advisory situation. So thank you for this opportunity to talk about currency, because it's the cryptocurrency is sort of like an enigma. A lot of people heard about it, but they really don't know exactly how it works.
My pleasure.
So just some final question that I thought might be fun for our audience. If you have not chosen to be in this particular field, what other careers do you have chosen and why?
I probably would be in the stock market in one way or another. Probably, a financial advisor is interesting. Just really liking to work with different people in that kind of a capacity where they're listening to me based upon information that I'm able to provide them that helps them kind of align for their future. Because, first and foremost, I do it for myself. So that's always been an area of interest of, how essentially to live the American dream and create wealth for myself. So, I'm on that journey, and everything that I do, whether it's, in real estate or if I was in that position, would be stuff that I would do myself. And I think, as you know, whenever you're selling anything, people know when you're being honest, and people know when you're trying to not take everything into consideration but your own interest. So, to me, when you come from a place of this is what I would do, it gets received. So anything in that services area and sales combined, and it doesn't really get any better than Manhattan. It's the Big Apple. It's the epicenter of the financials, markets for the country and maybe even the world. So it's exciting. I like the energy.
Yeah, no, absolutely. And as we were talking globally and the opportunities that are globally as far as real estate is concerned, it is important to know that we both are associated with Keller Williams, and that we have, over 160,000 people like ourselves that could help our audiences in terms of, acquiring, buying, or selling properties anywhere around the world. So this platform offers for us an opportunity to provide information and to be able to assist our clients on a one-stop basis, anywhere from their overall financial needs, and specifically and our sweet point is really real estate. So that's very dynamic market, and I again thank you for being with us.
Yeah, thank you.
Thanks for tuning in to the Financial Legacy Podcast. Here with me, Maria Ellis, and my guest today, Bradley, who was talking about the opportunities in the cryptocurrency. To learn more about how to work with me, go to financiallegacy.life. Here, the Financial Legacy Podcast. We're helping lives. We're helping people change their lives one person at a time to help you create and enjoy your financial success. Connect with us at financiallegacy.life for your complimentary consultation. Thank you again.
Thank you. Bye-bye.
In providing answers, neither Maria Ellis nor the Financial Legacy Podcast and guest speakers are acting as certified financial planners, advisors, certified financial analysts, CPAs, economists, accountants, or lawyers. Neither Maria Ellis or the Financial Legacy Podcast and guest speakers make any recommendations as to any specific securities or investments. All content is for informational and general purposes only and does not constitute as financial or legal advice. You should consult your own tax, legal, and financial advisors regarding your particular situation. Neither Maria Ellis nor Financial Legacy Podcast and guest speakers accept any responsibility for any loss that may arise from accessing or reliance from any information in this podcast. And to the extent permitted by law, we exclude all liabilities for any loss or damages derived directly or indirectly arising from the use of the information.